Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It's April 7th. This will be our chart lesson for the day. And being Thursday, this wraps up our week. No chart lessons on Fridays. Um, I thought I'd start out again showing you the daily chart. You can see we had our two measured legs down, and today we were hoping we'd get some follow through to the upside to show that maybe this is just a two-legged correction and we're going to go higher again. And be what would really be nice if that would be the center of the pattern and we get a measured leg such as the one from here. Let me show you here. I'm getting way ahead of myself because there's nothing saying this is going to happen yet. Not enough evidence. But should that happen, we're looking at a target close to 5,000 up there, which would be sweet um, for longer term. So anyway, that's let's hope that's the case. And very well, we could keep trading down, or we could make a little trap here and turn lower. But we're finding support at that midline. We're just not getting any follow through buying yet. So there's probably not enough evidence there for the smart traders to say, hey, I'm ready to go long again. Um, there was some buying today. We sold off a little bit in the afternoon. This bar really, I mean, when you look at the actual chart, it doesn't look like we sold off that much, but maybe we did. Um, anyway, we'll flip over that chart and we'll show you what I see over there, and we'll go through the trades and we'll wrap up the day and the week. Okay, here's a look at our intraday 2000 tick chart, and it looked like it was just going to be a range day, but we broke on out here. But notice we did come back and test that breakout. I need to drag this over a little further, and you can see, I mean, that's what you expect to happen. You don't know, generally the breakout will fail much quicker, but sometimes you get some follow through buying, but very rarely will it not come back and test this breakout area. So honestly, it looked a little like a downtrend day early. It started out looking like we were going to get a range, but we broke lower down here, and in the end, your range is probably, your lows are down here. That's what it looks like to me. But I started up here where you would normally start with the overnight lows and where we got the bounces. But you can see we were really struggling right along that support resistance line. It was acting as support and resistance, and prices tried to go lower, but they just couldn't muster it up, and then the buying comes in. And probably because that's right about where that midline is on the daily chart. So every time we come back to it, there's probably some buying coming in. And it got a little slow in here mid to morning, early afternoon, but we actually had some late afternoon trades today. So anyway, I'm going to back out or zoom in, and we'll go through the trades and wrap up the day. We had this move up, a couple of legs up, and then we started trending down, and 7 o'clock came. This is right at 7 o'clock. There's a failure here. Somebody asked me, I guess the failure technically occurred right here. So this is really a second entry. And they asked me how to avoid that. Just be careful entering on the engulfing bars because they're not reliable. But notice this big bar, and then you got a bar, and then this is an inside bar, and then this is an inside bar. And so you got to be careful with that because this will happen to you. So if you did enter here on this failure, you probably got stopped out only to watch it go exactly where you thought. But this is a second entry because of the way it's set up. It's a second entry short. Notice your new low, it goes first entry, and it turns back up, and then it turns back down. So when it came back through there, it's a second entry short. And so because of all that congestion, I don't think I would enter that on a golfing bar. I'd wait for this. And that's a really huge bar, but I still like that to go short. And what you might do is let it break lower and then drop a limit order back a little bit. You could have gotten filled pretty far back up into this bar, at least to right here. And then you get another second entry here. I marked this one green just simply because we're a little ways away from the EMA and we've moved a good bit, but it's a first entry. Technically we go one tick lower there, but that still is a couple of swings back to the trend line. And if nothing else, you can trade it as a range as long as you got room to scalp out here. It's a very bearish bar. Relatively small too. I think that's like 9 or 10 ticks. Yeah, 9 ticks. So that's a nice move. We drop on down, and then you get another second entry short. That's the first break of the channel working down the yellow channel. A second entry right off the key entry point, the EMA. Yeah, I like that one. It's a shame we didn't get any more than that out of that one, but it's still a quick, easy move. And then we bounced. I don't see any real good setup to get into this. You get a break, a new high, then you try to go higher once, twice. Again, it's an engulfing bar. I'd wait for it to close. So that's a failed second entry long. This is a little more advanced trade. I'm going to start saying that on those. If you're new to this, stick to the second entries and don't worry too much about the failures and traps, because you'll probably just get fooled and trapped, because they're advanced, and you need to have some experience reading charts, and you need to know what you're doing. So sorry, I forgot to turn my ringer off there, but yeah, just don't worry too much about these if you're new to this, because it'll just slow your learning curve. They build off of some of the other stuff. They're much more advanced. You need to be a skilled chart reader. If you're new to this, no matter how good you think you are, you're not a skilled chart reader. So I say that with all sincerity. I don't mean it to belittle anybody, but if you're new to chart reading, you're not good enough to trade those. So don't even attempt it. You'll just all you'll do is take a bunch of light. You'll get trapped more times than you see the actual trap. And you can ask some of the ones that have already tried that didn't listen to me. I'm sure they'll confirm exactly what I just told you. But anyway, we get the break and a new low here. And you can see the price action is working out perfect. You get a break, new high. We reverse, you get a break, new low. We reverse, you get a break, new high. We went sideways here. I don't see a good trade here. If there was enough room to get out to trade that, I don't know if there is. If there is, you could take that trade. See, it's just exactly 6 ticks, so it's not a lot of extra room there. There's enough there to scalp out, but I'm not crazy about that trade. It's just really congested there, and it's right in the middle. The thing is, notice your range here, and you're right in the middle of the range, and that's the most dangerous part. And technically, we should be trying to go lower rather than higher. And you see which way won out, the low side, because we came off the high side. So always remember that prices want to go from high to the low side to the high side to the low side, and then low side back to the high side. And that's the way it works. So if you start getting stuck in the middle, it might swing a few ways and you can trade it different ways, but be aware that the likely direction is lower. And so I don't like trying to trade that to the long side for those reasons. And of course, we come up here and make a little double top and we turn down. There's no way to really get in that trade. There's a lower high here, but I wouldn't trade that. It's too far away from the EMA. It would have worked, but you can see we do get the break and you get a couple of swings lower, but I don't see anything in there I'd want to trade either. But if you wait a minute, you get a first entry, second entry, and I think this is the one somebody asked me about in the forum. Maybe I'm wrong. I'm not sure. If it is, I'd take that trade based on the way it looks on my chart. On their chart, they had another bar or two in there, and it was more congested. So, but on my chart, I like that second entry. Nice bearish bar. It actually pulls back and gives you a failure, but I don't like trading that as a failure in a range. So we're not looking for failures in a range, and you can see how congested that. It works, but just don't risk it. And then we kind of chop around. We try to go lower 2 more times. So you got a triple test there and a nice bullish bar at the bottom of the range. Take that one. You got a higher low here, but not a very good signal bar. I did make this one green just because it looks a little congested and we're still below the EMA. You can't really worry about the EMA so much in a range, especially a tight one, because you'll see it move back and forth over and over and over. So if you try to worry too much about the EMA, you're never going to find a trade on a tight range when there might be some good ones. However, if there's other reasons not to like the trade and you see the EMA maybe sitting there, be careful with it. Here, it's just so much. You can see we've been going sideways. We did push higher here, so that gives you a little more confidence on the second entry. We'll probably at least test that high. And so if you got room, take it. And this is real close to being red. You could argue for it to be red. It's just right there at the borderline. And if this would have been a good signal bar, I'd say take that one all day long, but that's just too neutral. And we do run up, and we just about basically make a double top, and you get a big bearish bar at the top of the range. And so now we're heading lower. And somebody sent me an email, a couple of people, and said, wanted me to explain more about ranges. When you're in a range, you trade range rules, and basically that means you're trying to buy down here and you're trying to sell up here. You can't sell down here at the lows because you'll get burned, and you can't buy up here because you'll get trapped and burned at the top. These breakouts normally fail. You can see you broke out there and it failed. You broke out down here, it failed. And what do prices do? They go from high to low, from low to high, from high to low, from low to high. And that's what they do until they eventually, obviously all ranges will eventually give and it'll trend again. But you don't know when it's going to give, and that's why you don't go short down here. You have to wait on some kind of breakout pullback short, and we don't get that here. It just keeps going, so you can't trade that. Yeah, it's a shame that but if you got in up here, you're probably going to get a runner and trade this all the way down. But if you don't get in up here, there's just no other entry here that's safe. And yeah, it worked this time. And if you sit here and kick yourself and say, I knew I should have gone short right there, guess what will happen the next 10 times you try to go short right there? You'll take home a loser with you. So never look back on a trade and say, I should have taken that trade. If you followed the rules, even if it was the best move you've ever seen in your life on a chart, you still did the right thing. And you got to learn to grasp that and live with that. Otherwise, you're never going to be successful at trading. So anyway, we've come down here to the lows of the bigger range. So what are we going to do? We're probably going to bounce if it doesn't break out. And we just kind of start going sideways. So the key here is you're not getting rejection. You want to see prices get rejected. That's rejection off the highs. That's rejection off, somewhat rejection. That's what rejection off the lows looks like right there. Prices don't hang around. They just shoot off and go straight up or straight down. And here they hang around. So you're not getting rejection. So you really have to trade this like a little range. And notice you get a triple test down here. It's a fairly decent signal bar, but it's not perfect. And for that reason, I made it green. But as long as you got room to scalp out by those highs, take that trade. Let me put the little range on here just so it's clear. Sometimes I don't put these on here because I can see it without even looking at it. But a lot of people are new and you haven't trained your eyes for this stuff that well yet. And always draw this stuff. It helps. And so go long right there, and you're looking to ride it back to the highs. But sometimes on a breakout, you'll get lucky, and it'll be an important low, and that's an important low because you actually get two legs up there before we go lower again. I didn't measure them. They're probably close to being two measured legs. And there it is. It's two perfect measured legs right there. Up, and so now you'll probably get a measured leg down. Measure this leg. I don't always draw these either. And look at there, perfect measured leg, and then it bounces. We end up going a little bit lower, but that turns out to be the low. And that's what they'll do. They'll run stops and trap people short, and then they'll let it turn it and boom. So once you see those two measured legs, doesn't mean you have to stop trading, but before you go short anymore, you better have a good setup. So anyway, don't trade that right there. It actually runs up and you get a second entry short right here, but the signal bar is no good, and then it's too congested here. This last bar is really tempting because it's like a little breakout pullback short, and it's a very bearish bar, but you're right back at that support, and I just would wait for something better. And then finally you get a break here. You got this little, I never did color this one. Let me put some kind of color to it just to make it a little easier to see for everybody. And you're running up and you get a close outside, move to a new high, big bearish bar, and it confirms that trend line. That's a key entry point. Yeah, it's congested, but if you understand why, because prices are struggling to go higher. and you got the EMA right below it, so it takes a little momentum. It has to get to where it's going before it's going to reverse. Look at it, boom, the bottom falls out. Probably get a runner right there. Nice trade. And then you didn't quite get a measured move. It kind of corrects, and unfortunately you don't get another short set up. And then finally you get that measured move, and next thing you know, you're going higher. I don't see any reversal here. That's too. Look at all that congestion. When you start seeing that, you'll get chopped to pieces trying to trade that. Don't trade it. And we actually get our break, and you try to go higher once, try to go higher twice. Of course, you don't want to be going long, so you might look at that as a failure, but I just didn't like it because it closed above the EMA. It's a little congested. If you went short there, it works, but you can see it doesn't trap a lot of people until it broke higher one more time, and that probably pulled in some more longs. Then you had a little bit of a trap. But you also, that's the original low of the range, and that's the other problem is you're trying to get short right into that, and that's a no-no. So, and then even once this came into play, I guarantee a bunch of people got short right there, and then they got stopped out only to watch it go where they were thinking, and they probably jumped back in right down here, and then it reversed on them. Some of you watching probably say, yeah, that's me. And so you can't go short here because you got the lows of this pink congestion range area. And so this will probably be a failed breakout. And so notice what happens. You break out here, it fails, it comes back, it tries to go lower once, tries to go lower twice. And so that's a failed second entry short on a failed breakout of a range. And look how bullish that bar looks. Go long one tick above that and try to ride it back to here. And if you're lucky, this is a important low and you're going to get a big move. And look at that move. I don't know if you could get a runner on this one or not. Possibly. But if you do, look at it go. And that turns out to be the low of the day. Not just an important low, but a low. That's why I like these failures, to try to get a piece of them if you can. So anyway, that's a big move up. And then you're just kind of chopping sideways. Stay out of that stuff. Every time somebody sends me a loser, they're trading something like that and wondering why a second entry didn't work. You just get chopped to pieces. Forget about when you start going sideways like that and you got sideways action. Forget about second entries. Forget about failures and don't attempt to trade it. Because guess what's going to happen to you? You're going to get burned. You're going to get chopped up. So just stay out of it. Yeah, you might miss a good move like this one right here, but I don't really see. Those have matching lows, so and it is a chance to get long at the lows of the range, but it's just so there's no rejection there. And the last time we went up, we couldn't even get back to the highs. And you do have this channel that worked down, and that's a break, and so you did get a new low there, but you got to take into account that pink range or that congestion too. And so I just don't like going long there. I think you need to wait till it comes back till you find a key entry point. Of course, that is a minor key entry point across there, but I'm just not crazy about it. If you would have gotten a higher low here, then yeah, go long, but you don't get that. It just takes off. You get a higher low, but it's way up here, and that's too far to consider a higher low. And then guess what it does? It does the same thing again, and there's actually two legs. There's actually two legs down in that one leg. Then there's a two-legged correction, and then there's one more leg down that's equal to this leg. So that's perfect price action, really. So that one's tempting, and you might could argue, hey, 1, 2, 3, but it's so close to. Actually, you wouldn't have this trend line, and so there's no trend line here or anything. It's just kind of sideways action after running up here, and you don't quite have a new high. Let me back up here because there is a channel working up here. And so you're working up, and that's the first break, and it tries to go higher, and then you get the next leg down. Now you'll probably get the new high, and then it comes back and resets it and sets this trend line. And somehow the price action is moved slightly here, or my channel's moved. I don't know how that happens, but it does sometimes. You can see that's a perfect channel there. But anyway, since it bounced early here, you might take that trade. Everything's below the EMA, so you can see it did find some resistance there, and that's what you're worried about because it may turn it back down. But if you draw your little channel here, you did get a break, and you did get a new low. So there's, I probably should make it green. Just quit talking about it, make it green, and move on. And then, of course, we ran up, and then we come back, and we start just going sideways over to here, and then that kind of sets the trend line right there. It really confirmed it right here, but definitely did here. But the reason I like this trade, I don't have my line on there. You made that low, you tested it once, you tested it twice. So you got a triple test with a nice signal bar. Now again, it's very congested right there, but you do have your break and a new low. And it worked over here, it worked here, so that's kind of like a repeat pattern. Take it if you want. Wait and see if you got a higher low, and that comes right here. So take it right there if you want. And if you're a little nervous still, wait and see if you get a reversal, which comes right here. And that confirms this short-term trend line, and this trend line is definitely confirmed now. And you could have really already had this just by drawing it off these highs and pulling it down. I really didn't want to insinuate that earlier because a lot of you can't do that yet. But you can always, if there's no trend line setting up on this side, see if you can find it on the opposite side. If you're coming down here and you can't find a trend line, see if you can find it off this side. And you could, after you got these first few swings right here, you could have drawn your trend channel and pulled it over to your low here, and that would have given you this trend line when we came back to it. Again, most of you couldn't find that, so I described these trades where you could find them anyway. But some of you that have watched me do that before and have learned how to do it, you already had your trend line right there. And this was a nice move. It just takes off. And this is a very strong trend right here. So technically, once we got to about right here, anytime the trend, we came back to that trend line and it gave you a bullish signal bar, you could just about go long. So there's one right there, and then that was the last one. But then you get another triple test here, and another bullish bar. This almost looks just like this. So I like going long there again. Just make sure you got room to the highs. You don't want to go long right into the high of the day. This was a really strong trend, so you would expect a break and probably two legs up. So it's no surprise that we got another leg up here, even though we already had a break here and a new high here. And then, of course, once everybody realizes, hey, it's over, the bottom falls out. And you can see what happens. You get a break and another new low. I didn't mark this one. It's right at 230. But you got a break and a new low right there. So, I'd probably wait on a higher low, which comes right here, but it's a little late then, so it's after 2:30. But if you really wanted to, you could take that trade right there. It's a little bit aggressive that late in the day, and I don't, if you're going to be aggressive, you want to do it earlier in the day. And most of you probably don't want to be aggressive until you get to become a very experienced chart reader. Then you probably want to be more aggressive and try to catch these breakouts and things like that because of the fact that they're important price levels, important lows and highs if it breaks out and fails at the high side. And you could see this once you got a break in a new high here, that's an important new high, and because look at that move back down. So anyway, that's what I saw today. A little bit of a lull through here after about 9:30. There's one here right at lunch. And it just kind of slowed down a little bit. It rallied up, and the prices were moving well, but there just weren't a lot of setups. So anyway, I'm going to wrap it up. This is going to wrap up the week. I'll be back Monday. I'm done for today. I'm done for this week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.